Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for Wednesday, the 26th. Happy Thanksgiving. We'll be closed tomorrow. Believe it or not, the Board of Trade and markets will be open on Friday. Um, I would expect thin and lousy trade. There's an old explanation: don't sell a quiet market. Holiday markets are always quiet. Generally, you get these moves like this. In the big picture, 13-cent range in the beans, a nice 10-cent range in corn. That's nice to see. Uh, no confirmation yet of Chinese sales. We are range bound. I will say this: if there's a really interesting chart formation in March corn, which kind of all comes to a head on January 10th, that week, the January 10th week, we're in a wedge. So it's nice to see a bounce. If you follow my letter, you know that I'm a big believer in very simple technical stuff. I don't keep it very, I don't have 10,000 indicators and 50,000 decisions. I did notice that the March corn, we had that rally from the August lows to that 457 area just a couple weeks ago. And then we ran out of gas, right? The low was basically halfway back. If we hit 433, it would have been perfect 50%. But we see that a lot. Market rallies, breaks, rallies, breaks, rallies, breaks. So we had that break. We had a 50% pullback for the entire move. Now, are we going to go back up and retest that 457 area? Hopefully, right? There's a lot of corn out there in the bins. And it's always nice to see prices go higher. There's no weather issue yet in South America to talk about. Yeah, the Chinese supposedly bought another 10 to 15 cargoes. That's anywhere from 2,500 to 3,500 contracts. So it's not in the grand scheme of things. It's not massive. I mean, the funds are long. 96,000 contracts now, probably just a little under 100. Um, and I would say, looking ahead for the risk, there's going to be a risk on the December USDA report, and hopefully we continue to rally into that report. The big risk is going to be the January 10th report. A lot of information is going to finally come to a head. Now, are people going to believe it? Probably not. Are people going to argue about it? Always. That's all these people ever do, is argue about the yields and the stuff and the information. And to me, it's wasted energy, folks. It's just you have to deal with the pitch that the pitcher throws at you. Sometimes he throws a fat one right down the middle. Sometimes he tries to decapitate you with a fastball to your temple. And stewing about it and worrying about it, unless you have psychic abilities, to me is just absurd. So if you're a farmer or producer, of course you're always bullish. That's why you need to be rewarding rallies. If you're an end user, you're always bearish because you want to talk prices down so you can buy your inputs cheaper. It's a story as old as time. So anyhow, good day. Net changes: March corn up 7 cents, 445 and a quarter. Jam beans 1131 and a half is where we settled, up 6 3/4 cents. Even the wheat got involved. Not quite a 10-cent range, but still up a penny and a quarter on the day. 6-cent range there. Wheat is going to be struggling. Now, wheat has also recently had a pretty nice technical correction. We had a 53-cent rally. We gave back 60% of it on the low. So now we're bouncing off that retracement. So these retracements, they're not infallible. They're not the keys. It's not the goose that laid the golden egg. What they do provide, in my opinion, is a target area to make decisions or to plan for, or whatever. Like if you're short and you're worried about the market rallying, you're like, okay, what's the upside potential? If you're long, and you're worried about the market continuing to go lower, what's the downside potential? That's why we use these levels, not because they are infallible. On that note, I'm going to switch over to the protein complex, and we opened higher and finished higher, not one pullback. I can't remember the last time we've had that in the last 2 weeks, where we just had this one direction trade and didn't whip around all over the place. We opened higher. A lot of guys trying to look for a pullback to buy. We never really got a substantial pullback. Um, very, very technical. The and I put this in a letter as well too. I do the homework so you don't have to do it. But if you look at the correction that we had recently in both fat cattle, and feeder cattle, now we're on the turnaround phase, right? Market gets oversold, everybody gets bearish, people throw their hands up, people stop answering the phone. People think, why did I ever decide to get into the cattle business? Because they're so disgusted after, feeder cattle dropped, 85 bucks off its highs. That's painful if you didn't have a hedge. That's mentally exhausting if you didn't have a hedge. And so you can get very, very down on yourself on these corrections, especially if you're a farmer. And again, a lot of people are like they want to blame what the president said. They want to blame this. They want to blame that. You can blame all you want. Uh, our job is to manage price risk, not to sit here and tell each other, you know, happy stories. I mean, there's always a risk that the market turns on you. So the good thing is now we've had this correction. We're going to have to see if we continue to have a recovery correction, right? So if you look at fat cattle, or excuse me, let's look at feeder cattle. So we dropped 85 cents. Okay, that was 40 grand a contract. Excuse me. We haven't quite clawed back 25%. That would be around 313. So how much of the sell-off can we claw back? A lot of people were saying, well, look at this there's a gap on the charts going back on the way down. If you look at the March feeder cattle chart, and that the bottom of that gap, sort of the beginning of where it would get filled, is around 336. It doesn't get filled to around 346. Well, is it a coincidence that 336 would be halfway back of the 85-cent sell-off? You have to tell me. I don't know. I don't think it's a coincidence. I think lots of times these things kind of line up together. So it's a key area to watch. If you look at fat cattle, okay, particularly, let's talk about June. We dropped basically 45 bucks, around 17 grand a contract. How much could that can we claw back? Well, today's high, we went right to the 25% retracement of that 40. It's 44 and a half. I'm calling it 45. We had a $45 break from 244 to $2. $2 held, and that was just um, yesterday, right? And people were thinking, wow, is that level going to hold? I don't know, $2 held. So we tested $3 in fat in the feeders. We tested $2 in the fats. Now we're getting a little bit of a bounce. How much of the bounce can we see? Again, if you want that type of stuff, it's not like it's a secret. It's not. I haven't reinvented the wheel, but they're just levels that I do every day, and that's part of what I do for my clients. I do the boring homework every day, that stuff you don't want to do because hopefully you've got a life where you're running your business, taking care of your family. Do you really want to be sitting and looking at charts every day for a half hour or 45 minutes? So you're contracting that stuff out to me. I'll do it for you. I do the homework for you. You can click on it, have the information, have the level, make a decision. You don't have to waste all the time, doing the charts. And I spend an hour every morning doing the letter, looking at the charts. On the weekends, I spend 4 hours. Believe me. So I do it because I love to do it. I would do it no matter what. It's a big part of what I've learned in 30 plus years. And again, not because they're perfect, but I just think the more information you have, the better. The more key levels you have, the better. They don't always work. They're not infallible. And that's the reason a lot of people don't pay attention to them all. Like, well, it doesn't work all the time. I'm not going to pay attention to it. Well, no, I think that whenever you make a decision to buy or sell or get long or get short or to hedge or not, you're always making a decision with the best information you have. So there's fundamental news out there. There's people screaming about what the yields were and how many acres are going to be planted, what the demand is, and how many bushels got sold. That's all fundamental. The technical stuff is very important though as well. The 200-day moving average, the 100-day moving average. I'm a big believer that you need to know what's going on with money flow. Pull up a chart of Bitcoin and cattle. They look like twins. Well, a lot of the same people that helped Bitcoin get expensive helped cattle get expensive. The money flow, and then that's something that doesn't get covered really in fundamental news. And I've seen people, if you're exclusively fundamental, so that and you ignore technicals and you ignore price levels, that's just as bad as being exclusively technical and not paying attention to what um, the fundamental news out there. It's a combination of both. It's an art more than a science. People are talking about, ChatGPT is going to do this and that, and the other thing. At the end of the day, ChatGPT is just repeating whatever the person programmed it. So whatever decisions uh, the computer makes about pricing, it's all based on somebody. And I got news for you: all the people that went to school that are programming these things, they all have similar backgrounds. So you've got the same type person. They may have different color eyes, different color hair, or different whatever. But they all kind of have a similar background. And I think in the end, whatever programs they write are going to reflect their biases, yes, to be more precise. I do like the bounce in lean hogs. Um, Lean hogs are on a huge 5 year bull trend line. We're leaning up. We just tested it, this 78, 79 cent level. Very, very, very big. We also had a pretty horrendous sell off in that contract, 13, $14. And lo and behold, we're clawing back. How much of it? Well, today's correction off of the low, again, which is and I'm looking at April fats, excuse me, April hogs. We had a high of 94.7. The low 2 or 3 days ago on the move, it was a 4 month low. We traded at 81.10. You do the math. Now we're still in a downtrend, but we're getting a rally, right? How much further can we rally? Well, I would say this: we just took out the 25% today. The next level I would be looking at on April is that 86.30 area, right around there. Why does that matter? Well, that's the next retracement. It's a 38% retracement of the last sell off, the $14 break. So very technical. We try to use it to make better decisions. Um, I'm looking at crude oil as well. Uh, See if that moves there. Jan crude oil is dancing around 57, 56. If we ever did go down and test 55.12, that was the April low. That's going to be a 5 year low. I did do Iowa Public Television's Market to Market yesterday. I drove out to Des Moines and sat there with Paul and with an economist, very smart guy, Ernie from Creighton University in Nebraska. And he was mentioning that, if inflation comes back, we could get, another push higher, because high inflation would throw everything kind of out the window. You saw that happen during COVID. Once they started printing money, we had an explosive move in all the commodities, not only corn, wheat, and beans, but everything. Just because if we get inflation back, then your only defense against it is to own things, because the dollar that you're holding in your hand is just, gets worth less and less. That's why we're all paying $100 for groceries that 4 or 5 years ago you could get for $60. That's why you go out and, it's $6 for a hamburger and a Coke at McDonald's when it used to be 250. That's inflation. So that may be something that drives us. And then again, that would be overriding fundamental and technical stuff. If you start getting people who are just like, I gotta own commodities, that's when the index funds come in, because they just buy and hold. They don't trade. There's two types of funds. There's the speculative funds, the managed money, where they're trying to be, George Soros or Paul Tudor Jones, are trying to, buy beans at $10 and sell them at $20 or whatever they're doing, or vice versa. That's one group of money. The other money is buy and hold. It's the um, Goldman Sachs index. It's Jimmy Rogers, Goldman Sachs, Jimmy Rogers. They all just say, okay, I want to own commodities. I don't want to think about it. So they go out and they buy a basket and they hold it. They don't trade in and out of it. So if we got inflation came back, or even if we just got that, had that be the new narrative, the new thing that they're writing about in New York Times and Wall Street Journal and Barron's, and if everybody's like, oh, inflation's back, that would be friendly for the grains and all the commodities. So on that note, everybody have a great Thanksgiving. We'll be back at it Friday morning. If you're looking for help, give me a call, 312-638-8868. If you want to see the stuff that I share with my clients every day, you can take a look at my letter. Thank you for your time. Again, have a really great uh, Thanksgiving. We'll be back at it Friday. Everybody take care. This is Chris.